For Q4, we achieved a healthy growth of 3.2% quarter-on-quarter in dollar terms and 16.2% year-on-year. This translates to 7.4% quarter-on-quarter and 25% year-on-year in rupee terms. And please remember, this is the 24th sequential quarter of revenue growth for us. In terms of the full year, since March is the full year ending as well, we delivered $1.65 billion in annual revenue, growing 17.4% year-on-year. And from a EBIT perspective, we came in at 15.6%, which is a growth of 31.5%. PAT at 12.6%, which is a growth of 33.2%. Now, from our perspective, we are pretty happy with the growth that we have delivered. And this is the year where the prior year was 18% plus growth. So from our industry perspective, this is industry leading growth, and we are pretty happy where it is.
I was looking at the entire demand scenario for you because you've been growing at more than the industry growth rate. And the services growth rate is also slowing down if you look from year to year basis. How do you see this entire environment at this point?
Yeah. So from our perspective, look, the demand environment obviously has its own puts and takes. On one side, we have the war in the Middle East, and hopefully, that settles down over a period of time. There is a technology shift happening, which is once in a decade kind of a technology shift. The AI shift is real, and we have been building capabilities. It is about, from our perspective, it is about building the right capabilities, and we have been on it for the last 3 years. Whether it is building platforms, infusing, AI into various services that we are doing. Although the AI part is much bigger in the tech part of it, the other two industry segments that we deal with, BFSI and healthcare life sciences, it's a slightly slow roll. But over the next several years, we believe all of this will have an impact of AI in a positive way for companies like us who build the capabilities, platforms, IPs proactively ahead of the competition.
Is there a way, do you provide some guidance on the kind of AI specific deals that you have, or the total revenue pie? Within your revenue pie, what is the total AI specific deals that you have done?
Yeah, so we don't call out AI revenues specifically because from our perspective, one way or the other, AI will get infused into every part of the services that we do. And we are building platforms, whether it is for AI-led software development lifecycle, whether it is for AI-led reimagining of business processes to use the AI part in different industries, whether it is pharma for better pharma research, banking, financial services, and so on. So like the digital era, I'm pretty sure over a period of time, this will be a moot question of what is the AI revenue. It will be, people who use AI growing much faster than others.
Now, you've given us an aspirational revenue target of nearly $2 billion for FY27. How realistic is it given the kind of macro and geopolitical environment which is there?
Yeah, so from our perspective, look, the 2 billion goal, we have always said it is an aspiration, not a guidance. Having said that, it needs us to grow at 15% plus CAGR. And, from our perspective, last 4 to 5 years, if you look at it, our CAGR is more than that. From the time we went public in 2010 till today, we are at a CAGR of 17% plus. And we have grown 24 sequential quarters. Obviously, we have to work hard towards achieving the aspirations that we have. And we are confident, give or take a quarter, we should be there.
And do you think that the current demand environment and the kind of disruption that is likely to happen because of AI, it gives you enough opportunity to maintain that CAGR growth rate of more than 15% per annum?
Yeah, so look, I'm not giving you a guidance. Let me put it again.
I'm trying my luck, Sandeep.
Yes, I'll explain the things, but I just want to make sure you and your viewers don't take this as a guidance. We are a public company. We don't give forward-looking guidance. Now, in terms of how do we grow, the growth can come in 2 or 3 different buckets. One is, basically growing with our existing customers by delivering more services to them, being more relevant to them. Second is building the AI-led platforms ahead of others, whether it is our native platforms like SASVA or building capabilities, integrating things like Anthropic Claude, OpenAI Codex, other things into our platforms like SASVA, doing data-related work around platforms like like Snowflake, Databricks, and so on. And we are on that journey. We are building those capabilities faster and better than our competition. And third, for companies that build these capabilities, there will be a shift from customers that will happen in terms of market share towards the forward-looking capability build companies like ourselves. And that's exactly what has been happening for the last several years. And that's where you would see a differentiated growth in Persistent compared to the industry average.
Now, you expect AI-centric adoption to accelerate in FY27. Um, are you, well geared to manage that kind of acceleration? And when that happens, is there a risk of, revenue deflation also coming in through?
Yeah, so look, for the like to like effort, absolutely. The effort will deflate. But if you are able to get more wallet share from the customers, if you are able to bring AI-led platforms, you will be able to have more value capture from the same customers. And so it will not be a like to like pricing with people who do not have, the capabilities, who are basically bringing plain vanilla capabilities and getting the same work done with lesser billing rates or whatever it may be. It is all about human plus capability, being able to do work better, faster, bringing more competitiveness to our customers, and hence being able to capture more value in terms of what you can charge the customers, because you're delivering more value. So from that perspective, we remain confident of building capabilities, gaining more market share incrementally than our competitors, and being ahead of the curve. So that's the story that has been there for last several years, and that's the journey we are on.
You spoke about creating AI-led platforms. Can you give us a sense of the kind of platforms that you're now creating from an AI point of view, and how scalable and
Yeah.
how the clients are receiving it actually?
Sure. So let me give you two examples. So for the AI-led software development or product development lifecycle, we have a platform called Sasva. So it is an end-to-end, right from your requirement gathering to coding to doing various other things like release management and so on. Now it can do it natively. We have an open source LLM that we have customized, fine-tuned for delivering this, or we can use underneath Sasva, Anthropic Claude. We can use OpenAI Codex. We can integrate with technologies like a Windsurf, Cursor, etc., etc. So it is basically a platform which is end-to-end fully capable, or can work with industry-specific LLMs or other tools. This is for AI-led software development. The other part is where we are enabling enterprises get ready for data from a perspective of modernizing data, being able to leverage that for AI. There is where we have our platforms where we are doing things which are automated. So we have a platform called Iora. Underneath, we have built 500 plus agents, where these agents are specific to doing modernization, doing technology lift and shift from legacy systems into the new and so on. So combination of these things accelerate the time to market, bring more quality, and are able to bring us more value capture from the customers. So hopefully that gives you examples.
How have you been able to manage this currency fluctuations which are happening? Q4 has been a good quarter with respect to tailwind coming in from currencies
Yeah.
because of the depreciation, but Q1 seems to be the other way around where the currency has appreciated. So how are you managing this tailwind in Q4 and the headwind which is coming in Q1?
Yeah. So look, currency tailwinds and headwinds will always be there. So in the last year itself, if you look at it, in the last year to year and a half, we have seen the currency go from 81 to 93 and at times go up and down. So from our perspective, we use hedging as an effective tool where we hedge roughly about 50% of our revenues to be able to risk mitigate. And from our perspective, currency is not a place to, increase margins and so on. Hedging and other tools are there to de-risk, and we have to build the core business. That's where we are focused.
How do you look at the EBIT margin? Because it was a bit soft in Q4 for you, though you have given a margin guidance of 16 to 17% for FY27. How do you how did the EBIT margin work in Q4 for you?
Yeah, so Q4 FY26, we had an EBIT margin of 16.3%. And if you look at it from the overall perspective, we finished the year at 15.6%. In Q3, we had an impact of a one-time impact of wage code, which basically did not exist in Q4. And from overall perspective, if you look at it, we have driven pretty well in terms of both a combination of growth and margins and building capabilities as well. So from our perspective, we are very happy with where we are. We intend keeping the margins as much as possible between 16 to 17%, building the next generation capabilities and keeping the growth engine on.
How are you managing, some of the key verticals like a BFSI, Sandeep? Because that's a vertical which is much more regulated. There are many more guardrails there, where, with respect to how you can use AI on that model there, and many of the regulators don't allow LLMs. You have to have small language models that you can bring in to get efficiency. So, how is the BFSI space looking for you?
Yeah. So interestingly, you picked up a very good point where if you look at BFSI and healthcare life sciences, these are regulated industries. So on one side, there is restrictions and there is apprehension about using these large language models because of data, privacy, and other regulatory considerations. So we as Persistent have been working with some of these customers in these both of these industries, whether it is BFSI or healthcare life sciences, especially in pharma, where we are building SLMs which are hosted within the customer's environment, whether it is their cloud environment and so on, within their guardrails from a security perspective and so on. So in our point of view, a number of these things will also pivot towards having your own data, your own model hosted in your own you know guardrails and so on. And we have significantly good capabilities on this, and hopefully that should also help us in our growth journey going ahead.
Give us a sense of how discretionary spends have moved in the last quarter as well, because it seems that it's also slowing down because of the kind of macro and geopolitical headwinds which have come in. And in that scenario, is it easier for you to get do client acquisitions, and is pricing becoming an issue here as well?
Yeah, so look, the discretionary spend has been an on and off question for the last several years. Now, what is happening more importantly is within the spend that the customers have and a slight bit of discretionary spend, the shift is happening between squeezing out business as usual, support related spend, to putting more money towards the next generation capabilities. Even the customers have a business to run. They can't just be under invested in the forward looking part. So what they are doing is squeezing this, putting it in the forward looking, and that's where the capabilities matter. They are also eagerly looking to leverage the technologies like AI because it can also help them reduce OPEX in their own part, the operational expenses.
All right, so that was